Welcome. I am Ernie Goss, Professor of Economics and McAllister Chair here at Creighton University in beautiful downtown Omaha, Nebraska. Here I am on the first business day of the month of April to report on business conditions. That's Mid-American business conditions for the month of March. Now, the Mid-American area is the states stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, right down the midsection of the country. And of course, it's depending on agriculture and of course manufacturing, which our survey is based on manufacturing. And we call it a leading economic indicator. Now, why is that? It's because manufacturing typically leads. Now, it hasn't been doing such a good job predicting the overall economy because manufacturing's been in a funk. The Mid-American area has been in a funk in terms of manufacturing. And the overall index is just, for the month, was up again for the second consecutive month, but it's up to 50.6 from 50.5. Now, the index, as you know, ranges between 0 and 100. 50 is growth neutral, so we're just ever so slightly above 50. So it wasn't a good report, but it was better than the previous months. Now, it was the third straight increase, but as I said, the second straight month we've been above growth neutral. Now, here I'm going to bring up a chart that shows the direction and the magnitude of both the Mid-American Index and the U.S., comparing the two. And as you see in beautiful Creighton blue, the index has been trending upward, but for over the last 3 months, and particularly the last month, up ever so slightly. Now, the U.S. number there in red, you'll see that'll come out later on this morning. I expect it to be sort of like where ours, Mid-American, is, about slightly above 50. So all in all, it was a pretty good report. Jobs index, unfortunately, not good. In other words, we're still shedding jobs in manufacturing, particularly anything to do with energy, as you well know that. And energy is important, particularly in North Dakota and Oklahoma, two of our survey states. We ask about salaries for a new worker with a bachelor's degree, and it came in at $47,800. Now, that may not sound like a lot for a person that's fresh out of college, but it's up 5% from this time last year when we asked the same question. So that's $47,800 that we tracked this month. We ask about access to international markets because we're hearing a lot of presidential candidates talking about, well, we can just shut them. We'll negotiate hard. We'll put tariffs on those businesses. Not a good message, at least for economists, and not for our survey participants. About two-thirds indicated that access to markets, international markets, in terms of buying and selling. About two-thirds said it's important. So let's cease this talk about closing down the access to international markets that we're hearing from some of our presidential candidates. Now, export orders, not good because the value of the dollar, which makes our goods less competitive abroad, that's hurting manufacturing, hurting exports, but it is up to 50.0. Now, that's up from February's 46.1. So at least it's moving in a little bit better. Imports, 55.4 for March, up from 50.1 in February. Now, we're seeing imports increasing. That's what we expect because with a strong dollar, that makes foreign goods cheaper when they come into the U.S., and that's what we're seeing. We're seeing increased buying there. So that was a good number. Now, the employment index, as I said, was, well, I didn't say the number. It was 45.9 from February's 44.4. That's not a good number. We're still seeing job losses, not as significant as before, but still seeing job losses. Here's a real important number coming out of our March survey. The wholesale price gauge was up to 62.2 from February's 52.5. So that's a real key. In other words, wholesale price pressures, inflationary pressures are ticking up. And of course, what does that mean? It means the Federal Reserve may have to begin raising rates a little more aggressively than they thought, and as Ernie Goss thinks as well. So that was a better report. So I would characterize our survey results for the month of March as pretty good. We need to be a lot better to feel comfortable about the overall economy. Now, what should you, as an investor, as an economist, as a business person, as a policymaker, whichever one you are. What should you keep an eye on? Jobs report comes out later on this morning, and that's of course that's from the Bureau of Labor Statistics. Look for a jobs number addition of about 150,000 to 200,000 jobs added for the month of March. That's what I'm expecting. That would be a pretty good number. Keep an eye on the core CPI, the core Consumer Price Index, which excludes food and energy. That number has been ticking up. If it should move to 2.5% to 3% year over year, that's moving into an area where the Federal Reserve is going to have to raise rates a little more, what they call normalization, moving back to normal. I think we're going to be moving in that direction. I expect more rate hikes than the Federal Reserve says now they're going to do. They're saying maybe 2 this year. I think we could have 3 rate hikes this year, not in April, but later on this year. Keep an eye on the yield on the 2-year Treasury. That 2-year Treasury note yield will tell you the U.S. Treasury note, 2 years. That number will be, as it moves upward, is indicating more inflation, more likelihood of the Federal Reserve raising rates. So that's a number that's a yield to keep your eye on. Now the risk. What are the risks that you need to be cognizant of or watching? One is oil volatility, real big issue of the ups and downs. I expect that oil to move back to, say, mid-30s. That'd be a good move. Anything below 30 is something to be concerned about. Business profits, which of course a lot to do with energy, not good. We were seeing business profits languishing. Of course, that's going to mean the stock market's likely to move up and down, but most sideways when you put it all together. Keep an eye on the aggressive Federal Reserve or a passive Federal Reserve. So listen to the language that Janet Yellen, Dr. Yellen, comes out with. She's been sort of passive, meaning indicating rates are going to stay low. I think that could change. She will change her language and perhaps indicate that we may have a rate hike sooner rather than later. Now, not in April, but perhaps in the summer, this summer, 2016. So that's it. That's our survey for the month of March. And I thank you for joining me, Ernie Goss, here on the first business day of the month, the first business day of the month of April. Until we meet again on May the 2nd, which is the first business day of May, may your economic cup runneth over, and thank you.